Today we're going to talk about the different types of mortgages and what you have to have in order to qualify for each of those. The first, and probably one of the most popular loan types, is a conventional mortgage. They are called conventional mortgages because they fall within the Fannie Mae or the Freddie Mac guidelines. So typically, to meet those guidelines, you have to have at least a 620 credit score. You're going to have a debt to income ratio below 43%, meaning the total amount of money you spend each month does not exceed 43% of your income. You're going to have a stable income and employment history. So if you've been self-employed for a year and you were a W-2 employee before that, you're probably not going to qualify for a conventional mortgage because they want to see at least 2 years of the same type of employment, the same type of pay. You're going to have private mortgage insurance on a conventional mortgage if you don't have at least 20% to put down. So most mortgages are conventional mortgages. They fall within the Fannie Mae Freddie Mac guidelines. There's a box. If you fit in that box, then great. You can get approved for a conventional mortgage. If you don't, then you're going to have to look at one of these other options. Second loan option, and another popular choice, is what we call an FHA loan. FHA stands for the Federal Housing Administration. It's a government-backed loan. There's not really a minimum credit score requirement given by FHA. However, most lenders are going to have a credit score overlay that if they're going to do the FHA mortgage, they're going to require you meet at least a 580 credit score. It could be lower for some lenders, it could be higher for some lenders, but typically 580 or above, you can get an FHA mortgage. The great thing about FHA is it only requires a 3.5% down payment. So if you don't have 3.5%, you can actually get that money gifted to you from an immediate relative, from your employer, or some states, not Tennessee, but some states will allow the realtor's commission to go towards your 3.5% down payment. So FHA is a very popular option for first-time home buyers due to the low down payment requirement. All FHA loans are going to require private mortgage insurance. There are some exceptions to that if you put more than a certain percent down, but typically you're going to have mortgage insurance on the loan for the entire 30 years unless you refinance out of that. Third option is a VA loan, or the Veterans Affairs loan. So that's a benefit that eligible veterans, active duty military personnel, and surviving spouses can take advantage of. There is no minimum credit score requirement, but again, lenders will often have what we call a credit score overlay that you have to meet in order for them to underwrite that particular loan. No down payment is required on a VA loan. So again, it's a benefit to veterans. It's a way to say, thank you for your service, and we're going to let you take out a mortgage without having to put a down payment. But there is what they call a funding fee, which is sometimes like 2% of the loan amount that's going to be added on to your loan. Now, if you become disabled in the line of duty, a lot of times your funding fee is waived. But in order to qualify for a VA, you do have to provide your certificate of eligibility from the VA. So if you're a veteran or you've been in the military, you know what the certificate of eligibility is. You would have to provide that to your lender to prove that you are in fact active or past military. Another popular loan option for first-time homebuyers is what we call the USDA loan. USDA stands for the U.S. Department of Agriculture, and it was initially put together so that people in rural areas who have lower incomes could qualify for mortgages. So the USDA loans are 100% financing. They do not require a down payment. But in order to qualify, you do have to meet certain income requirements, and the property has to be in what's called a USDA eligible area. So here in East Tennessee, all of Granger County, all of Hawkins County, all of Jefferson County are USDA eligible counties. So anywhere you bought in those three counties, the property would be eligible for USDA financing. Here in Hamlin County, there are certain parts that are eligible for USDA, and then there's other parts that are not going to be eligible. Used to it was if you were in the actual city limits of Morristown, then you were not eligible. And that's not necessarily the case anymore. So there is a website for USDA that we just have to go to and look up the property address to see if it qualifies for USDA financing. Typically, your minimum credit score is going to have to be somewhere around 640 to 680. There are income limits, there's property eligibility criteria, but it's 100% financing. So you're not looking at having to come up with a lot of money out of pocket for a down payment. If you are purchasing $1 million home, let's say, and we do have those in our area, that is what we call a jumbo loan product. So if you borrow more than what Fannie Mae and Freddie Mac have set out for their conforming loan limit, then you're going to have to get a jumbo loan. And I think right now jumbo is considered 750 or above. You have to have exceptionally high credit scores, 700 or above to get that. You're going to have a good debt to income ratio, and most of the time you're going to have at least 20% down to get a jumbo loan. Now, here in the state of Tennessee, we also have THDA loans, the Tennessee Housing Development Agency, and they can provide 100% financing as well. Typically, you're going to have at least a 620 credit score. You're going to have to meet income guidelines, and there's going to be specific qualifications of the property itself. So, obviously, I'm a realtor. I am not a mortgage loan professional. So, if you're thinking about getting a mortgage, but you're not exactly sure what programs you qualify for, you need to reach out to a mortgage loan officer, sit down, talk with them, and they're going to qualify you based on the program that best suits your needs. So, not every loan is going to be a one-size-fits-all. It's very important you talk to a loan officer before you go out and house hunt. If you need a recommendation for a great loan officer, leave a comment or send me a DM. I'll get you a name and number.